Hey, welcome back, everybody, to today's Market Explained. And we do market commentaries here at Four Star. And then we also do interviews with really interesting investments and interesting people in the finance world. And we have a return visit here by Dr. Canaan Van Williams. Dr. Williams, welcome to today's Market Explained podcast.
Yes, thank you for having me, Brian. I'm excited to be here.
Great, good to see you. And we did talk about a year and a half ago about impact investing, and a lot has happened since then. We're seeing a lot of cultural shifts and things like that. And
Mhm.
we do some investing with you guys, but I think it's important to talk about what you're doing, and the subject is really impact investing. So a lot of people consider impact investing a little kind of buzzwordy, like, are you making an impact, or is it really a thing? And what is it all about? What do you think impact investing is all about, Dr. Williams?
Yes, impact investing is about, it means allocating capital for both strong financial returns and measurable social outcomes.
Okay. And so that can be done.
Yes, yes, yeah, that's what we do at Proactive Sustainable Bonds. Is that we focus on verified social impact is what we do. Verified meaning that we have third party audited due diligence by impact providers such as Morningstar Sustainalytics, Impact Evaluation Lab, Blue Mark Fund ID,
Mhm.
and we're currently in process for a PRI, Principles for Responsible Investing signatory.
Okay. So those are accolades you get when you're involved in that business, and that there's certain like tracking, so they know that you're a legitimate player in that business, right?
Absolutely. And that there's no impact washing that's going on. So they verify the impact, and it's not just through documentation. Our impact is verified through our track record, through videos, through drone footage, through what we've done. And you submit a lot of documents, so especially I'm sure, the audience is very familiar with Morningstar, the big
Of
fund
course.
ratings company. And so Morningstar bought Sustainalytics, and Sustainalytics is their impact arm. Um, and with Morningstar, it's a very rigorous process, as it is with the other impact verifiers as well,
Yeah.
especially impact evaluation labs. And we have a Blue Mark Fund ID verification from Blue Mark, which is, I'm told is a big deal.
Yeah. So they have a verification program on impact investing. And why do they have that? What are they trying to do, and why do we have the certifications and everything?
To separate who's real and who's not.
Okay.
You have a lot of groups who are saying that, oh, yes, we're affordable. So, for example, Proactive Sustainable Bonds, we focus on housing affordability for low income affordable housing and workforce housing and manufactured housing, multifamily housing, and SRO properties. And it's very important that, investors who allocate or, you borrow money from the government for different housing affordability programs, they really add an extra layer of protection as it relates to impact verification. That we're
Mhm.
doing what we actually say we're doing. We're not saying that we're affordable housing, and only 10% of the portfolio is affordable, or that we're directly advancing sustainable development goals, and we're not doing that. So it's a voluntary
Okay.
process.
So and this is designed that way to make sure, as you say, that folks in the business are real, because a lot of people might
Yes.
might try to say, "Hey, we're impact investors, and we're going to have an impact on the community," and then they pocket the money, or they do something, So there's a lot of fly-by-night operators. So this is the
Oh, yes.
industry. This is the industry saying, "Okay, who's real, essentially, and who's not, in the impact world."
Yes, and making sure that dollars are allocated to where you say they're being allocated to, because quite often, impact dollars, especially from the government and some institutional investors, that impact dollars that come in may come in at really low interest rates, or favorable terms, or housing credits, or just a whole array of financing options that are very favorable. And you have people who will quote unquote self-report or say that they're an impact firm, and and they're actually not.
Right. Okay, well, that's good. So now we have a standard in the industry and we understand what that is. So now, uh, Van, if I can call you Van, that's
Yes.
your name. So Van, there are many types of real estate developers out there, and they develop housing and multifamily and single family and all kinds of different things. And the impact in investing is primarily about housing, right? Not like commercial or industrial or anything. It's really about housing.
Yes. Yeah.
Okay.
NOAA housing.
Okay. So why do we need impact investing? Like what, how does this fit into, when you see all the developers out there, why do we need it?
Oh, so so that we can help, so we can help other people to do well while doing good. And we need it because there are so many people in society who are vulnerable, who are underserved, who are low income, who need a second chance, that need housing.
Mhm.
Not just our low income, but our America's workforce, um, and people of that nature.
Right. So this is in areas that many developers might not want to be involved, right? Because they're low income areas, they're maybe forgotten areas, maybe they've been crime ridden, other areas. So what we're doing is we're trying to turn around neighborhoods and turn around towns, right?
Yeah, absolutely. And the other thing, Brian, is that housing is both a basic human need and one of the largest drivers of inequality.
Yeah.
Traditional real estate often chases, quite often with traditional real estate, it's all about maximum profit, which can push rents higher, displace families and overlook underserved communities. Impact investing flips that model. Impact investing places capital in a housing that is affordable, sustainable, and socially inclusive while generating solid returns. So, when applied to real estate, affordability, stability, equity, and sustainability.
Right. Okay, great. Great. Well, so like we're in Chicago today taping this at our headquarters. And Chicago has neighborhoods in the west side and the south side and different areas, and then a bunch of suburbs south of Chicago that are low income. And the folks really need help. There's a lot of desperate situations down there, and one particularly our friends in the neighborhood of Harvey, Illinois, a south suburb, and you and I have been down there. For full disclosure, we're investors with Dr. Van, and we've been down there in Harvey with Mayor Clark, and Harvey was trying to rebuild the community down there. It's a very underprivileged community, and one of the projects you're involved in, Dr. Van, is down there in Harvey, right?
Yes. Uh-huh.
Great.
So, yes, sir.
So I was down there with you,
Mhm.
and we took a look at that building. And what could we talk a little bit about that building that you and I saw?
Yes, it's a 30 unit. It's at 14437 South Halstead Street in Harvey, Illinois. It's a property that was previously featured on the news, excuse me, where low income residents were displaced. Some were even locked in the building, illegally evicted. There was considerable crime going on there, and the building was subsequently shut down. Previous owner was not making repairs. The building fell into total disrepair and slum, and Proactive came in. We were able to buy it on a distress sale.
Mhm.
Really, really, fantastic numbers.
Mhm.
And so we're now renovating it. We're waiting on our last permits, and we're going in and we're renovating not just with cosmetics, but and we're putting on a new roof, lead renovation, so low E toilets, low flow water features, insulated doors and windows to help residents, have energy efficiency on their rents, and their monthly costs, monthly housing costs. And also, our goal is to be 20 to 30% below market rents there in that particular area and to revitalize it. It's on a main street, and we're really excited about the progress that we've already made to date.
Great. And as I said, I've seen the building, and it really did need a lot of work for sure. And I've not seen the redo, but I'm excited to come in and have a look. Um,
Yes, absolutely.
and now there's going to be, you say the rents will be 20 to 30% below market, right? Is that to assure that they get full?
Well, no, it's not a matter of that's just our mandate. So with one of our impact reports with Morningstar Sustainalytics, they approved us for a green bond, green loan for sustainability. And our goal as an impact company is to be 20 to 30% below fair market rents, so that people aren't cost burdened
Right.
with housing, because we invest in and develop NOAA housing, so naturally occurring affordable housing. And because we buy properties for pennies on the dollar, or we get them from economic development departments and we agree to keep them low income, we go in, we renovate, we pass that cost savings on to our residents, and then really good returns on to investors.
Mhm. So you do get some help from the government in this case, but it's not like a regular subsidy. In this case, wasn't the property acquired for very little cost
Yes.
whatsoever, right? Right.
Mhm.
So how does that process work?
So a lot of our properties that we get are off-market properties or distressed deals. In this particular instance, this was an on-market property that we followed for a while, and we have a really great agent in the area named Dave,
Hmm.
and he sourced the property and he followed it, and he was very instrumental in facilitating a sale. And so eventually the seller calls us and says, "Hey, I'm going to go into foreclosure. Just take the building off my hands." So we paid a transfer fee, uh, and had our money in escrow for repairs and
Hmm.
updates. And the current lender, who rarely does loan assumptions, agreed to work with us. They liked our mission, they liked our track record, and so we were able to pick the property up for very low cost basis. Once we go in, we finish our renovations. Uh, we'll book probably a 30 to 45% return, or more on our investment. However, we don't flip properties. We hold on to them for long-term sustainability, for our end user, the residents.
Hmm. Nice. So the fact that various groups of government are willing to basically give you the property, at a little bit of cost and but not much, that's what makes this work, right? I mean,
Absolutely.
some of those communities are so desperate that the land is really available, and the city had to foreclose on it, and they just own it, and they want something to do with it. They don't want it to be vacant. They don't want crime there. They want people there, right?
Yes, absolutely. And we're really excited about those opportunities, and that's why we're able to offer such great returns. Is because we go into different municipalities or places, and we're offered a lot of properties based on our track record, based on our verification with our impact reports, and based on that, we sign covenants that, hey, we'll keep these properties affordable, and as a result, even the tax base is lowered.
Mhm. Nice. So very interesting. So then you go in and you start the project, and then what is the projection for? We know what the rent levels are, but what about like you take in capital for investing, you have capital invested yourself,
Oh,
and
absolutely.
and so like people invest. What kind of returns could they get from an investment like this, where we're also helping and impact a neighborhood?
Yes, sir. I'm glad you asked that question. And for full disclosure that I have to give first, it's not FDIC insured, may lose value. Yeah, you can refer to our PPM. So targeted return, we have 5 different tiers: 9%, 12.5%, 14.5%, or 15.5. It's a bond, so it's debt. Short durations of minimum 2-year hold. However, investor can select all the way up to 10 years. Then we have our rapid housing bond that's over 24 months that returns 30%, that has a higher minimum. And then we have one program that returns 110% over 3 years, and that has a $2 million entry
I
for that
see.
one, $2 million minimum. However, we're able to make the return because we go in, we renovate properties really quickly, and we can refinance them at a very low rate. So when we go in, we plan on, so even on a 3-year program, we go in and we're planning in year 2 to refinance, to make sure we have that capital available for our investors.
Okay. So those are debt offerings where
Yes.
so you get paid your coupon, and the $2 million deal is obviously a significant return. Um, did you have some programs before that were both a combination of equity and some cash flow or debt
Yes.
related? Yeah, you did. Okay, because I think I
Yes. Yes, we
remember
did.
you had those as well. Are you going to be offering those as well, or no? Now
Yes.
it's no.
Well, for some investors that want a longer term return, or maybe they want a side letter, yes, we'll offer that. And by the way, I forgot to include that. So our minimum hold is 2 years, and it's current income. All of our programs are current income. So it's
Mhm.
not that, you need to wait. It's current income. And on the larger returns, it's a bonus at the end, with return of capital.
Hmm. Okay. So now as you're managing these properties, you have a lot of people that are lower income people that might live in a community like Harvey, Illinois, or in some of the neighborhoods in Detroit or wherever the projects might be. What kind of issues come up? Like, are there trouble? Are these people still trouble? Are they not trouble? Are they just good people trying to get along? How do you manage all that?
So our managers, so we're trained. I'm glad you asked that question. So our proactive, we have our in-house management, and they're good people trying to get along. Most of them come from a social services agency that's vetted them. Their case managed. We're really excited about all the veterans
Nice. Okay.
that we're now working with in housing through the Veterans VASH program here in Chicago, Illinois, in the south suburbs. So we have a case manager we're working with to place people in Cook County, where all of our properties are. And so we have very strict rules in our communities, especially, you're coming in, you're getting, a 20 to 30% below market rate on rent. Everyone, it deserves to have a quiet, safe, and decent place to live and quiet enjoyment of their unit. So we're very strict on our communities with the rules and what people have to abide by. And when people come in, especially like if they've had some mental health or they need to be med compliant, or case managed in the case of some veterans, that they have crisis situations in place in case that were to arise. And we also do on-site management at all of our properties. And in the low income space, it's very important to have on-site management, a day-to-day liaison.
Mhm. So you do have somebody there watching, make sure that nobody's
Absolutely.
blasting loud music or causing trouble or scaring residents or anything like that, right?
That's correct. Another program that we're entering into with each of the locales, I know in Harvey is it's a camera system called Vigilant Overwatch
Hmm.
that's monitored 24 hours. It's monitored by offshore people.
Hmm.
And also part of it is Harvey has it connected to their camera system. So people are under the jurisdiction of local law enforcement.
Okay. So interesting. So then somebody's watching and do they use drones as well? Do they have drones?
They do have drones. However, the cameras are monitored 24 hours.
Okay.
So yeah, so we don't, we don't need to have drones or
No
anything.
drones. Okay, you got cameras everywhere. Yeah. Okay, great. Well, good. So how many projects have you done that have made this kind of impact on individuals?
Oh, wow. We've housed over 1,000 people to date since June of 2020. Uh, we've created roughly 350 homeowners
Very good.
at lasting sustainable impact. We sold a property to publicly traded UMH, which is a social impact affordable housing REIT.
Mhm.
So we've had quite an impact, and and then and within that time, excuse me, we've returned 7.5 million to investors. And our best years, unfortunately, some for people who had COVID, but we had a really good year during COVID, and we've been consistent in paying our investors their preferred returns, whereas a lot of larger firms stopped paying press. But because we're in a low income space, we got a lot of assistance from the government
Okay.
during COVID.
Okay. And now a lot of that's gone away.
Yes.
Okay. And okay. So then what is the end game for the investor? If you have a certain term on your bond, then the bond will mature and you get your capital back.
Yes.
right?
Yeah, return to capital. So and as I stated before, minimum 24 months. We do get some investors who come in for a couple 100,000 or different amounts that say, well, I'll try it out for 1 year. And then after a year, most of them like to stay in. However, most people really like the income.
Yeah, sure. Well, good. And now on the equity programs where it's not just debt, maybe they get some cash flow and then they'll participate in the sale of the properties. How soon will those properties sell? Like, and who would buy them?
So what we would do is, because we're an impact company and we really focus on the end user, which is our resident, we'd refinance at some point. And so most of our programs, so our main program, the minimum being 2 years. We have one that goes as long as 10 years. You select a term. On our other higher interest programs, it's a 2 year and a 3 year hold.
Okay. Okay. So presumably after about 3 years, then the properties will be refinanced. And then who takes the property then? Is that your group will take it back from the investors, or do you get other investors or sell it to other real estate management firms?
It can be a combination of all of it. However, we do not sell to just your regular investor who may come in and say, whoa, these rents are low. Now they're going to price everybody out or displace people. So if we
Mhm.
were to sell a property, it has to be to a either social impact, affordable housing REIT, or affordable housing group that's truly an affordable housing group, not just saying that they're an affordable housing group to increase the rents. However, quite often we'll refinance the property and keep it on our books.
Okay, very good. All right. Well, this all must make you feel pretty good that you're able to get investor money, get returns, and then still make an impact on underprivileged communities.
Yes, and clean up a lot of blight, uh, and bring hope to communities. I'm sure
Mhm.
you've seen it where, say you have an area and you start to clean it up and you start to make some improvements. Next thing you know, it has a rippling effect all the way down the block or in the surrounding areas. For example,
Exactly.
the park we sold a publicly traded UMH, we went into that park. It was 6 weeks from being condemned. We went
Mhm.
in, our basis was 1,200,000. November 2018, August of 2022, we sold it to them for 5.2 million, and then sold them an additional 700,000 in manufactured homes. So we were really excited about that.
Sounds like it. Well, great. Well, this has been a great discussion. And Proactive Realty has all these different investment programs. And so as you gave a discussion about legalities, this is not an offer to buy or sell any securities. So Four Star does have the proactive programs on our platform, so investors can access them through our firm, Four Star.
Yes.
We also have our diversified alternative funds, and there are various positions in different parts of the diversified funds as well. So we're investors with you also. Um,
Yes.
and
Thank
so,
you.
my pleasure. So everybody who is interested in this kind of program can talk to their financial advisor, Van, right? And then go from there.
Yes, there's financial advisors, and if they'd like to just learn something, about the program, they can go to sustainablebonds.com, www.sustainablebonds.com, to learn about proactive sustainable bonds and see a lot of the work we do, as well as case studies.
So, folks, I have seen lots and lots of real estate programs, and this is a very, very unique one. Like I said, the word impact investing, it can be very political, a little buzzwordy, but they obviously have an industry standard to make sure that people who are saying they're impact investors aren't just making it up to raise money or fly by night operators or whatever. So there's a certification program to make sure that everybody's legit. And so you're obviously all part of that. And then once you've done that, government will assist and often give the land and older buildings that are abandoned for free. And we're very limited cost. So there's ways to make this happen. And it's for the good of humanity, right? So we're actually helping people who don't have places that are decent to stay. And you're doing a good job and you're making money while you're doing it. People getting good returns, and we're helping out people that really need it.
Yes, yes, thank you. I appreciate that very much, Brian. And also for your viewers, if they'd like to get either of my books, I have two books on Amazon on the subject. search Canaan Williams. One is the affordable housing multimillionaire. The other one is driving social impact investment strategies for transformative NOAA housing in distressed areas. NOAA meaning naturally occurring affordable housing. We're a rapid housing provider, and we also have a nonprofit foundation as well that helps to support our efforts and the general public's efforts as well as it relates to housing and housing essentials
Mhm.
for the low income and
Nice.
second chance housing.
Nice. Well, that's great. And you wouldn't think it possible in America to be in this position, but not
Oh, yeah.
everybody's in great positions. So I think it's really a very unique offering, everybody. And I just thought I'd once again interview our friend Dr. Canaan Van Williams and learn about Proactive Realty and the programs they have. So thanks, Dr. Williams, for being with us today.
Ryan, I thank you for having me, and I thank you for shining a light on this and especially the housing crisis, and more importantly, the housing affordability crisis.
Yes. And that is sustained for sure.
Yes.
Not only at the low income level, also at the mid income levels. Housing prices are exploding, and we need to change some policies to bring more housing on. I think we're about 7 million housing units short of the amount that
Yes.
are needed, right? And there's additional dwelling units being made all over the world, all over California.
Yes.
Um,
Yeah.
so
And pricing our kids out. Like, our kids are getting out of college and they're starting careers, and I know my son, he's has a security firm, and it's like, wow, he makes well over 100 grand a year. And he's still him and his wife, and they're still priced out of the market there in California.
yeah,
So it's really tough.
yeah, very difficult. Well, good. Well, you're making an impact in a real sense, in the real sense of the word impact. And again, we really appreciate you being with us today, Dr. Van. And we'll leave it there for today. All right.
Thank you for having us.
Okay. Thanks, Dr. Van. Thanks everybody else for being with us. We'll be back again with another episode of Today's Market Explained. And we'll do some market commentary again, and then we'll go from there. Thanks, everybody. Bye bye. Thanks for being with us today. Bye bye now.
Bye.